blockchain earlier this year called Metal L2, and it is a part of Optimism's Superchain. Can you kind of tell us the decision behind creating this blockchain and why you decided to join the Superchain?
Yeah, absolutely. I've always been a big fan of Ethereum. I got to see Vitalik speak in 2014 at Coin Agenda when they were just launching Ethereum, and I knew it was going to be something big. Metal DAO originally launched as an ERC20 on Ethereum, and so we kind of really bet on Ethereum. We've launched a bunch of products around it, an early crypto wallet, and so as we started to build out the company, we realized we need several things. We need a fast and feeless blockchain, which we built with XPR Network, and then we needed a network for banks and credit unions where they could launch their own private ledgers. And ultimately, that became Metal Blockchain and has grown pretty significantly in the time that we started it, with financial institutions joining very rapidly. But the one thing that we were missing in our ecosystem was the connection to the greater DeFi ecosystem. So we had made this great platform, but it was our own little bubble, our community around Metal and XPR, and was not really tapped into the greater Ethereum ecosystem. And also, one of the things that I love about Optimism, the Superchain, was that the Optimism team has built a trustless bridge between Ethereum L1 and L2s. And soon all of the L2s in the Superchain will be able to communicate with each other and move assets between them. So I saw that. I'm a big believer in this interoperability and this shared network. Right now, blockchain are all these little disparate networks, and you have Solana and you have Ethereum, and there are services to move between them, but for the most part, it's not some sort of seamless thing. You have to go through, Coinbase, or you have to go through MetalPay, you have to go through some app or platform. So with the Superchain, our vision was, we started this with Metal Blockchain. We started building private ledgers for banks and credit unions and FIs. How do we go from the private ledger to give a gateway to the biggest DeFi system in all of crypto, or DeFi network in all of crypto, which is Ethereum? So we started building Metal L2 with the vision of bridging the banks and credit unions and payment networks to Ethereum. Ultimately, they can have their own network, but if they want assets, for example, USDC, to come in to their ledger or come out, that could be possible through Metal L2. So in building Metal L2, and I guess one of the best ways I've come to describe it is, it's similar to Coinbase Base, but if Base had a token and decentralized governance around it. And so not only that, but also in the kind of Base world, you have Coinbase. In the Metal world, our vision is that we could have every credit union and bank. Now, I don't expect JP Morgan, for example, to be part of that, or the top
never
four
say
banks.
never.
You never know. I'll come revisit this interview later and say, dang, they joined. But and we spoke to JP Morgan. They like what we're doing, and I'm a big fan of Onyx. But there are 4,000 other small, mid-size, and large regional banks. There are over 5,000 credit unions across the state, or across the country. That's a massive opportunity. Imagine when all of the financial institutions, and the top four only make up, like, I think 15 or 20% of the country's AUM in banks, right? So if the majority of all the credit unions and banks could connect to blockchain, this could be a massive. That could be the very beginning of the decentralized financial web. And so with Metal L2, we seek to bridge that to Metal Blockchain and connect all of the 5,000 plus credit unions, 4,500 plus banks across the United States. Maybe not the top four, like I said, or maybe so, but there's a huge opportunity. We look at cryptocurrency as a multi-trillion-dollar market cap, but just a small percentage of the banks across the U.S. that's multi-trillions of dollars of assets in the banking system. And I think as networks become more connected, and banks and credit unions can settle faster, and they can use this technology, and you could, for example, interact with Bitcoin with a bank in the future. I think that makes a lot of sense. It's not like I have my my checking account on a hardware wallet on a ledger, right? You want to keep it inside the credit union, inside the bank. And I think ultimately that custody and that vision will evolve, and we'll see it in the future, because that is the model that has worked for centuries, right? We trust the bank to safeguard our assets, and we don't have to keep it at home. We don't have to keep it on a piece of paper or anything like that. And that will evolve for the crypto space as well. So we also kind of envision a time in the future where your bank or credit union may also work directly with the blockchain, in the sense that maybe you have some stable coin, you have some USDC or XMD or PayPal dollar, or Paxos, what have you, and you want to deposit it into the bank, or you want to withdraw from your checking account to buy some Bitcoin or some crypto. It should be seamless. I shouldn't have to wait days. I shouldn't have to pay huge fees. In the same way I could give you my bank account and routing information, I should be able to plug the blockchain directly into that. I should be able to deposit stablecoins right into my checking account. And I think that will come about eventually. And that's really the technology that we're trying to build.
In regards to, let's say, aside from the top four, that 80% you talked about before, are you having conversations with them? What do you think the road to adoption looks like for that? And if so, do you think it's going to be kind of like an avalanche where it's like all at once, or it'll trickle in over like the next couple of years to 10 years even?
Yeah, so we are having these conversations now, and we found amazing success in a network of credit unions and small banks. We started approaching them and saying, hey, what do you think about JP Morgan Onyx? What do you think about decentralized ledger? And a lot of them have experimented with it, but they may not have that interest of, for example, going to the number one bank and putting everything on Onyx, because that kind of feels like a road to acquisition, right? Whereas a lot of smaller banks want to stand out. They want to integrate newer technologies, but may not have the internal resources or the right partners to do that. So when we approached credit unions and small and mid-sized regional banks, we got an amazing reception because we said, hey, let's build a testnet private ledger for you. You can start playing around. It's totally free. We'll experiment with that and see if there's something interesting for us to work together in crypto. And it started slow. It started with with basically like two credit unions saying, okay, we'll try it. And then all of a sudden it exploded.
What was the time frame for that? Like how long ago was that?
I would say that was probably maybe like 7 months ago or
okay,
maybe
so
like
very
7.
recent. Yeah.
Yeah, it was last year. Like into late last year, we started to bring on our first banking innovation partners. And after the first few came in, it was a small trickle. And like you said, then it became like an avalanche. All of a sudden, all of these credit unions and banks were interested in signing up. And they were telling other bankers and other FIs about us. And today, I think we have maybe 10 or so announced. And we have a lot more in the pipeline that we haven't announced. It takes a little while with banks because they kind of move slowly.
Right.
But
Yep.
yeah, I'd imagine that by next year, it will be, could be over 100 banks in the network officially announced. And I do think it will move very quickly because it's hard because it's, who goes first, right? Who's willing to kind of take that chance? And then as that evolves, it starts to snowball. And I think avalanche is the perfect word. I think that you're going to see 5 years from now, you'll see every bank, every credit union have some sort of private ledger blockchain technology integrated. And it's our hope that we can do it with Metal blockchain, the technology that we built, because we really want, again, something that's interoperable where the banks can communicate with each other. And we like the Superchain because it has that same kind of functionality between Ethereum optimistic rollups. And then in Metal blockchain, you have your banking subnets, and those can all talk to each other. So once we bridge these two, I think, the sky's the limit in terms of, you look at like what Coinbase and Robinhood have done for crypto in terms of adoption, institutional adoption. I think it's only begun. I think in the future, a lot of payment systems, maybe all of them, will be running on some form of decentralized and private ledger.
Yeah, it'll be interesting to see how that kind of transpires. And hopefully we can have another conversation where you update me on the hundreds of banks and other institutions that are now working with you guys down the line. I'm excited to see how that pans out, because I do think we're kind of at that inflection point where it just is a matter of like one push, and then it's hopefully smooth sailing for you guys.
It was pretty crazy because, after we got the first couple in the cohort, all of a sudden it was like, 5 more showed up, and then 5 more showed up.
Yeah, they just got to see someone else go through the door first, and then they're like, okay.
Exactly. And, I think the other thing too is that on the regulatory front, we're starting to get to the very beginning of having guidance like FIT21, the NCUA.
That makes them more comfortable.
Yeah, the NCUA has been very supportive of the idea of, they're the regulator in the credit union space, of the idea of blockchains. In 2020, the OCC wrote regulatory memos that banks can run nodes and create stable coins. And so those are kind of like the early, hints that we are going to move in this direction. And here are some forward-thinking memos and thoughts from regulators. But flash forward 5 years from now, I think things will be much more concrete. And as that regulatory landscape also evolves, you're going to see the floodgates open even more exponentially, I believe.
Yeah, no, I agree with you 100% on that. Regulation is a definitely important factor for a lot of these traditional institutions to consider coming in. But Marshall, as we wrap this up, I'd love to know if you could leave us with a piece of advice, maybe something you've carried with you throughout your extensive time in the crypto industry.
Yeah, I give this advice a lot, but I always say for anybody coming into crypto, no matter what you're doing, whether you're trading, you're just, buying your first Bitcoin, learn about it. Don't worry about trying to make profits or, what you should trade or do. Learn how it works and play with it. Get the book Mastering Ethereum by Andreas Antonopoulos. Take a Solidity 101 course, even if you've never programmed or anything before. Learn about crypto, because through learning about it, all of the value that you saw, you'll get back tenfold.
I love that. Marshall, thank you so much for coming on the show today.
Anytime. It's my pleasure. Thanks for having me on. Hopefully I can come back soon. Cheers.